Could your Truworths shares fund your wardrobe? Can your Sasol dividends fund your fuel expenses? This week, journalist Kristia van Heerden spoke to industry experts about the concept of hedging your lifestyle costs through your investment portfolio. I must say that sounds great, especially the part about getting my wardrobe paid for. But Tell us, why did you decide to do this story?
So as an investor myself, and I'm kind of new to the investment environment, I'm always trying to figure out what the best way is to go about this whole investment business, right? So, you know, you want your money to grow faster than inflation. That's how you build wealth, that in compounding, of course, you know. But if you are spending money in your normal everyday environment, surely you should be investing in that environment as well to hedge your spending. So a few years ago, Finweek did this story on Sasol. And the journalist at the time wrote that your Sasol dividends could be paying for fuel price hikes at the time. And I just found it so fascinating. It just seems like such a brilliant idea, right? So I started writing the story thinking that, you know, I'm going to talk to investment experts, you know, the really smart people, and they're going to be like, you know, Chris, brilliant. This is such a good idea. And then I was surprised to find that that is not entirely true. You know, in the end, a balanced portfolio, all the things that we keep hearing, you know, you have to have equity, you have to have property, you have to have bonds, you have to have a little cash. All of that, in the end, remains your best investment advice.
I must just say, you've just burst my bubble a little bit there. I was really thinking this is some groundbreaking stuff that you're talking about. But at the end of the day, is this what industry experts had to say to you?
You know, mostly. You know, everyone was kind of lukewarm. I think nobody wanted to burst my bubble because I was so excited about it. But in the end, everyone said, you know, you could do it. But also, you have to really understand the investment environment really well. So you need to be able to look at a company's balance sheet and understand exactly what's going on there. So it doesn't only have to do with price inflation. It also has to do with how the company is run and the company's debt and the company's place in the market and the competition. And so how one of my experts explained it to me exactly like that. You know, in fact, he's going to be on the next segment. Explained it exactly like that. To understand a business, you know, is complicated, and in the end, it's probably a lot easier to just invest in, you know, an ETF.
Well, we're going to be unpacking this a little bit later, and we don't want to give too much away because you've got experts right here in studio with us. But did they ever talk about a given formula or a tried and tested strategy that works? No.
Yes, I mean, and this is unfortunately, you know, like everyone else, I want something that will shoot the lights out. I want something that will make so much investment sense and that's going to get me super wealthy and retired by 40, right?
Yes, or 35.
Or 35. 35 even better, actually. But everywhere I go, I went to the Stocks for Frocks event, for example, the other day. And every time I write a story on investment, what people keep telling and people keep coming back to is a balanced portfolio invested over a very long period, so a 10-year period. So, and that's where you really start to see your returns. And in the case of an ETF, for example, you do get exposure. If you, for example, buy the top 40 ETF, you do get exposure to Sasol. You do get exposure to, you know, to the big listed companies, and you do sort of hedge your lifestyle that way. So, you know, I think trying to find a magic bullet to get me rich is probably, it's turning out to be a very hard thing to do.
Definitely.